Okay, I'm back. It's been a while since I made a video. Just things have happened and I haven't really had time. But I've spent a lot of time upgrading the algorithm, and I'll give you a quick sneak peek here. For my subscribers now, which aren't many, you guys are going to get possibly the only look at this. So what I had to do was, in the beginning, I am going to just close out of this. My first algorithm basically just took 10 studies or indicators from ThinkOrSwim, and I'll just show you like one of these. I tried to do them for individual stocks, and I just thought, oh, it's going to take too much time to make one for each individual stock. But so this is a certain indicator, so is this, so is this one, this one, this one. So I basically took a certain number of indicators. Originally it was about 30, and I just generally applied them to all stocks, and it didn't work well for all stocks. Like Tesla only used about 5 of the 30 indicators that I took. And how did I determine those indicators is, let me just show you, and I may have to pause. Okay, so here is my spreadsheet. Along the top here are all the indicators, and there's a lot. Is that 219? Yeah, 219. And I took out some because some were just not very good indicators. I just deleted them. So here I took like Apple, and I ran the algorithm just for this. Why isn't that coming up? Like just for this, that's like cumulative volatility index or something like that. And so Apple scored a 43 out of 100, which it's kind of low. 45. So anything near 50 is basically like a coin flip. And I ran, was it here? No, not there. But generally anything above like 57, 58%, or even below 40, 42% means that the indicator, there's something going on there with that stock and that indicator. So like here, you got BMY, it scored a 36. So that means this indicator is, it works if it's a reverse indication of the stock price. So basically when this goes up, the stock price goes down. So I have to take that into account, and it looks like a lot of these, except for PDD, I think that might be a Chinese stock, basically trade inversely proportional to this index. So that's good. That's what I want to see. And then some of these, like this one, I'm not even sure. I think it's look something. It's a positive indicator, except for mirror. Oh, well, yeah. So some of these stocks, like when it's related to COVID or related to China, it's hard to use indicators for because news affects it so much. So take this with a grain of salt. So I went through and I tried to find all the best indicators, and I did that by looking at how much this deviated from 50% and got an average score. So like here's a really good score, decent, and then you get down here, because I sorted it, I tried to sort it by this column or this row, and so you see some of these are just, these only deviate like 3 to 4 percentage points from 50%, which is no different than a coin flip. But I took 180 of these and broke them into, I had to break them into 3 separate algorithms because the script was too long, it wouldn't run it. So as you can see, so this version 2A, has the first 61 of these studies or indicators. And then the second one, I've got the, let me put in the B. And I wonder if this has got to be my computer. I need more RAM. I've got a small computer. My kids used to use it for gaming, but now it's kind of outdated, but it's nice and small and it looks good on my desk, so that's why I use it. So here are the three. And so I've got basically like 60 here, 60 here, and 60 indicators here. So if I hit OK, you're going to see them all here. So for Apple, you'll see just how well that does. The first line, now it's going to take like at least 30 seconds. So I'm going to go in here and I will show you. It's going to have 3 plots on each one of these. And the first line is going to be basically how much this stock uses these 60 indicators. So here's what I did. So this is the end of the, I've got the first indicator here, which is 80x. And it goes through and looks at how well it predicts the price in the future. And this n number is what determines how far away from 50% that it is. And so the higher away from 50%, the more this will be the multiplier. The more that this will increase, and the algorithm will use this indicator more than, let's say, something that's at 50%. Now, if it's at 50% accuracy, then it's just a coin flip. This number will be 0 and it won't even use this indicator. So if you, the plots are going to be, here you can kind of see there's 3 lines here. So the first one's going to be just how strong of an indicator these first 60 are. It's going to add up all 60, 61 of these indicator multipliers, divided by 100, and you generally get somewhere around 30%. Anything like 20% is pretty bad, but it doesn't really matter. The second plot is going to be the volatility. It's called volatility switch. I just found that that gave the best number related to volatility. And then the third one is the actual score. So it's going to be, it's a normalized score between 0 and 1. So the way I have it set up is anything below 25 is a buy, or 0.25. Anything above 0.75 would be like a sell signal. So now let's go and check out. I got this screen. I had to reduce the resolution just so that my video software picks it up best. So let me just get out of here. Oh, it's going to recalculate. I should have hit cancel. So anyways, you're going to see, first of all, oh, there it is. So the first number is green or teal. That's the strength of these 60. So here it's, I have a feeling these are going to update. But this typically means that it's about 30% usage of those first 60, 30% usage of the second 60, and 31% usage of the third 60, which are all pretty equal. So if you had one that was pretty low, like a 0.2, and this one was like a 0.35, you would give more strength to this indicator or this graph than this one. But generally, they're all going to kind of be the same. So here, if I look at it, then the second number, the red one, is the volatility. Now I use this to determine whether, okay, if it's a buy or a sell, I might just want to buy or sell that stock outright, just the stock. if the volatility is low enough, I want to buy an option. So, because I made the mistake of buying when the volatility was way high, and even though my stock swung in the direction I wanted it to, I still lost money because volatility dropped. So I lost the price addition of the volatility. So you always want to buy volatility when it's low, and when your stock swings in your direction, hopefully the volatility does too, and then you get a double tick up basically on the price of your option that you can just sell it. So here in this case, Apple. Yesterday I bought a 150 call in the November monthlies. So let's look at that. So the indicators were all giving me that it's a buy at this point. Oh wait, I'm in Pfizer. Apple. So let's, and again, I have to have these resolution settings set this way. It's really, looks really bad, but so I'm in the November, the monthlies, and I got the 120 call. 120? No, 150 call. So I went out to here, and I got it for 163, which is basically what it's at today. Must not be doing much today. So here you can see this grayish line is the buy or sell. So here was a sell. Basically, I mean, at this point the gray is about almost 0.8. So between here and here would have been a sell. And you know, any one of these peaks here, I mean, of course that would have been a sell. That would have been a nice point. So here's where it kind of started into the buy part right here. So you can see all these. Now this one's kind of a little bit out of the buy range, and this one's not so much either, but you know, I liked Apple stock, so I'm like, let me just buy in. And big thing also was the volatility was low, and I looked at this, I'm like, okay, so the last sell I had was basically around this point. It was like 152, 153. So I'm like, I'll be safe if I take a 150 call. So I'll go out at least a month. Now, I mean, here's the next monthly, but that's like today. So you go out at least a month to the next monthly, and then I just bought the 150 call. So the other one I went into was, so I go into my scan here, and I go down each one of these to see which ones are giving me a buy or sell signal. And I don't even see Starbucks on here anymore. Okay, yesterday Starbucks was on here. And my wife goes there a lot and drinks that dragon fruit drink, which is really good. So I figured just on that dragon fruit drink alone, that stock is going to go up probably. Of course, that's silly to say, but so here you can see it's giving me a buy signal down here. The gray is. Volatility was low, super low. I don't know what caused a drop like that. So each one of these graphs, and I bet you this one also will kind of follow suit with this, or it'll be below this 0.31 line at least. So Starbucks, so I looked at, let's see, right about here, right in this area was the last time it was sell, which I would put it at around 122, 123. So I bought the 120 calls. Again, out to November. Why is it not? Okay. So I got the 120 calls, and I got them for between 50 and 51 cents. It hasn't moved. Oh yeah, you can see there's my position. Now to test this out, I'm only buying one contract. It's not even a big deal because I'm working out the kinks. The last time I did this, a couple weeks ago, I bought in on some of the stocks when the volatility was too high. Like I said, I lost money only because I paid for the volatility, even though the stock went in the right direction. All right, so the last one is Wells Fargo. I typically stay away from financials only because I don't really understand them or what makes them swing. But I wanted to buy more than just two options yesterday. So for Wells Fargo, again, it's giving me a buy signal. Well, that doesn't look very good. Why did I buy this? Hopefully these will update and swing lower, because that doesn't look like a buy. Huh. Well, it was dumb luck then. So anyways, the volatility was much lower yesterday, and I guess that's going to be, I'm waiting for this one to come in. If all lines don't come in, that still means these might be updating too, but let's just take a look at this. I got the 50 calls. There's my position, and I got them for oh wait, I was looking at the current prices of these. My basis was, where is that cost? Oh, I paid like 28 cents for this, and now it's, wow, almost, it's over double. So let me look again at Starbucks. I paid, let's see, Starbucks I paid about 68-69 cents, and currently it's at about 49-50 cents. Apple I paid $1.71.72, and it's at $1.63. So far those two are really just, I'm down a little bit, but that Wells Fargo one really took off, and I've got to figure out why I bought that. The indicators were showing good yesterday, but when I look at this graphs now, well, anyways, I will end this video, but that's it. I've got a third revision here. This will be boosted up to version 3. These are all betas. So now that it's working fairly well, I can boost it up to version 3. Version 4, I'm going to be adding some more upgrades to it to make it better. I'm going to be looking at, see, a lot of these, this number right here is, these two numbers are variables that I use to help make the prediction, determine whether that stock is, whether the indicator is good for that stock. So if I adjust these, I'll get different numbers. Like this is how many days back I'll look to compare to say whether the indicator is good for the stock now, today. This is how many days in advance I look for the price movement. So, you know, from, let's say today, ahead 7 days, whether the stock's going to move up or down. Let me just try to explain this a little bit better, if this will come in fast. So to look in the past, so let's say it starts a year from now. You know, then look at a year and 7 days ahead to see if the stock went up or down. Look at that indicator to see if the indicator is low or high, and it will say good or bad. So by adjusting these two things, I can get different answers and maybe more fine-tune it. I used to have it at 82, and I try to do it in 21 increments because 21 is the number of trading days in the month. I like to have certain increments that tie into actual stocks. And 7 days ahead is just, Yeah, I just picked a day like 5, between 5 and 10. So I'm going to tweak those up a little bit, and that'll be version 4. So stay tuned.